We are putting spotlight on KEI Industries. The stock, try to pull that up, is down almost 6% in trade today. And to help you understand as to what's gone wrong and what's working for the company, we're joined by Puneet, who tracks this counter very closely, telling us as to what the bull versus bear case looks like for KEI Industries.
Well, thank you for that. It's definitely a stock under pressure despite quite positive results in this particular quarter. But that's largely based off a news flow and a key update regarding its capex plans that it gives. Now, when you look at the first bear case, and that largely expands that the phase 2 of its Sanand expansion has now been delayed to Q4 of FY27 versus Q1 earlier. And that's one of the key reasons. It was expected to have the high margin EHV segment, which is going to be boosting the growth next year. That has gone down by almost 3 quarters now and will possibly have a larger impact going into next year's margins. But this quarter, there has been a sustained performance by this particular segment. It's up 83% on a YY basis in terms of revenue. And hence, that's the first bull case. But largely, the Sanand phase 2 expansion getting delayed by almost 9 months is a key focal point on the stock today. When you look at the second bull and bear case, we've seen the phase 1 also, which was expected to come this year in November, has now been delayed by 4 months as well. But that's expected to have a smaller impact compared to the phase 2 delayment. But Q2 was a very strong quarter for the company, 21% growth in revenue, 31% growth in profits. So definitely a beat in terms of numbers. Just got caught in this particular news flow, and that's why the stock's down almost 6%. When you look at the third bull and bear case, we have mentioned that the cables and wire export has been growing exponentially. 425 crores in terms of the export for this segment. It's up almost 117% on a YY basis. But what the company actually did was use a lot of its domestic capacity or its capacity for the export market. They've promised that once the phase 1 of Sanand starts, the domestic growth will also start to show growth, but that'll be something to watch out for. And finally, in terms of valuations, stock currently trades at 45 times price to earnings for FY26. It does bake in a lot of positives, and now because of the delayment in plant for Sanand, we are seeing the negative reaction. But when you look at the other aspect, it trades largely in line with peers, but Polycab has been outperforming in terms of growth. So that'll be the other aspect to watch. Investors preferring any one particular player, someone like RR Kabel, we saw strong reaction post Q4 and Q1, could be another value play in the cables and wires segment. So that's largely the bull and bear case. It's going to be a choice that investors will have to make, that the high margin EHV segment will be delayed for some time, at least in terms of an exponential growth. But KEI does have a very strong parentage and a historical advantage as well.
Thank you very much, Puneet, giving us the entire 360-degree view when it comes to KEI Industries. But of course, KEI Industries, there is RR Cable as well as Polycab, cable wire players. They're expecting this quarter itself to be actually a stronger quarter based on the infra demands, which is actually picking up, and the cable wire players. Actually, on the number side, they have actually done well. Let's just pull up stocks, Polycab and even RR Cable. All of these stocks are in the red. Of course, some rub-off effect coming in, but RR Cable on the other hand is on the green side. Kush, on technical charts, out of these 3 names, any cable wire player, anything you're liking?
Surprisingly, it is KEI Industries. I mean, we did have a call on this some time ago, targets were hit. But now what's happened is that, with this kind of a cash, the risk-reward ratio on KEI Industries becomes extremely favorable. And in fact, if you see, the stock has a tendency of hitting the 50-day moving average and then rebounding. And lo and behold, if you see the low that the stock has made today, it is pinpoint precisely or very close to the 50-day moving average again. And you're already seeing some sort of an uptick from those low points of the day. So yes, while the uptick may not be a V-shaped kind of a recovery, but with this kind of a fall and the stock taking support and already seeing some sort of a rebound from a positional standpoint in terms of risk-reward ratio, I think I would still go with KEI Industries. The other names that you mentioned, RR Kabel, Polycab, they're still consolidating. This one has a good traction. I think this news perhaps will be digested by the market in coming days. So I would keep a stop loss at the 39.75 mark and enter the stock for higher levels of about 4,300 and 4,450.
Okay. All right. So that's the technical view with regards to where KEI Industries is concerned. But Nirav, your quick view on the entire cables and wires space, and what would your preferred pick be?
Well, I think this KEI is a classic case of valuations having been stretched to the limits. and I think a minor hitch definitely has created some problem on the valuation front. But I think they're likely to rebound soon. And the surprise gainer in today's market is Apar Industries, which is also up very smartly in trade. So I think this could also be one potential beneficiary going forward of the opportunities which are likely to emerge. But apart from this, I think Polycap is also looking quite exciting in trade.